When I consult with a prospective client, I always ask them, what are their concerns as it relates to accounting and tax? And they almost always respond with the following. One, I don't want to overpay in tax. And two, I want to make sure that I'm doing things properly. And chances are, if you're thinking how you would answer that question, you would respond the same way. So in this video, I want to share with you that, not overpaying in taxes and doing things correctly to not receive a letter from the IRS are not mutually exclusive thoughts, right? You can do both of these together. You can save the most amount of money in taxes while sleeping very peacefully, knowing that you're not going to get a letter from the IRS. So real quick, before I jump into the sort of real content of this video, if this is your first time watching, let me just quickly introduce myself. My name is Navi Miraj. I'm a CPA that puts content out all over social media to help viewers save thousands of dollars in taxes. So depending on what platform you're watching on, consider subscribing or giving me a follow, because that's the type of content I put out there. So let's jump now into the actual sort of discussion, right? So in order to discuss this topic, I created a visual to look at. And I want you to think of this spectrum, or think of this as a spectrum of mentalities as it relates to paying tax. So on the left, we have tax evasion, right? I don't want you to do that. In the middle, we have someone who's more conservative with their tax. So this is really the state that a lot of business owners are in when I talk to them for the first time. And on the right, we have sort of a business owner that has a tax strategist mindset, right? A business who implements every legal strategy they have available to them. So let's discuss sort of these categories one by one. So let's take tax evasion and kind of get that out of the way. My thought here is don't do this. This will eventually land you in jail when you get caught. If it doesn't land you in jail, it will land you heavily fined and you may not have a business any longer. So example of this would be like, you want to pocket cash sales and not claim that income on your tax return, right? So client pays you in cash. Oh, hey, I'm not going to claim that revenue. I'm just going to put that money in my pocket. Or creating expenses that you didn't even actually incur because, it may seem as though they're below a certain threshold that might be reasonable for your industry. So you're just going to make them up, okay? Smaller things like deducting all of your meals, right? Even if it's on date night or eating by yourself, you just deduct everything. I'll give you another couple of examples. Treating employees as if they're independent contractors, so therefore avoiding all types of payroll tax. Or perhaps you're an S corporation and you just choose to not take a reasonable compensation, and so you're just avoiding paying Social Security and Medicare taxes altogether. So I don't want you there, right? I don't want you being someone who's trying to evade taxes. Like I said, a lot of times you would be further along in the spectrum and be more of this conservative person without even knowing it. This is just because you're new to business and are doing things on your very own and learning about this on or for the first time. So a large part of the time, though, you're in this part of the spectrum because your accountant is just afraid of their own shadow, and they will usually not recommend strategies or may not even be aware of some of them for that matter. So let me give you some examples of this. Let's say you or your accountant still thinks that the home office deduction is a complete red flag. You're gonna get audited, so I don't want the risk of even getting audited, and what else, who knows what else they might look at, and so I don't want to take this office deduction. I mean, that's really an old school mentality, and you should be taking that home office deduction, but every once in a while, someone still tells me they're not doing it. Something more common would be taking a very high salary. So this has to do with if you're an S corporation and splitting your profits into a reasonable compensation, and the rest of the profits you can take as a distribution. You might have an accountant that says, oh, well, you got to take 90% of that in the form of salary, right? Why would you take anything less? Or an accountant that tells you, yeah, you can't really hire your minor children in your business. That's not a tax strategy that you're really allowed to do. Those would be examples of you're being way too conservative. And there's nothing wrong with being in this sort of yellow part of the spectrum, as long as you know that there are other strategies and you're just choosing not to put them in place, right? Just know that, at the end of the day, you're sending money to the IRS that you don't need to, okay? Now let's move over to the green part of this spectrum. And so that's what I'm calling sort of the tax strategist type business owner. So over here on the right-hand side of the spectrum, we have a business owner who is, implementing 100% legit tax strategies. So they are not, so they're saving, as much money as possible in taxes and not overpaying. They're also not concerned with getting a letter from the IRS either. And if they get that letter, they're just going to respond to it and the IRS is going to leave them alone. So, we can see some of the things here that this business owner is implementing with the help of, an accountant or CPA or whoever their advisor is. So a few items that are here is like a customized salary. Right? If you're going to go read on the internet or watch another YouTube channel that talks about how much should you pay yourself, it really comes down to an individual amount for each business, depending on how profitable your business is, how much effort you're putting into, earning that profit. Are you taking distributions? This is all part of the equation. There's no one size fits all answer. Integrating medical premiums and your health savings account into your payroll. That's actually a separate strategy that saves you, when you implement it, 15.3% on the cost of your healthcare premiums as well as your contributions to the HSA account. And so keep in mind, this is you as the officer of the S corporation is what I'm talking about here. Getting children involved in your business. There's no reason why you shouldn't be involving your minor children in your business. It does a few things. It teaches them the value of $1, but it allows you to, get a tax deduction for things you're going to pay for anyway that they just need as part of their healthcare. I'm not saying that you're just going to deploy this strategy no matter what. Your kid needs to be at least 7 years old to really do something substantial to earn some income. And if you take this strategy even further, you can actually, get a tax deduction, give the money to your kids can pay for their stuff, and whatever's left over, they can now open a Roth IRA. So can you imagine the money that they will have in a retirement account if they start saving for their retirement at the age of 7 years old, right? So, and there's some other stuff here too. I've got like the Augusta rule, which is, renting your home to your business for certain client meetings or things like that. I don't want you doing that just for the heck of it. It's a case-by-case scenario. Integrating trips as part of your business trip. So like what I mean by that is like if you travel on a Thursday, you do business on a Friday, you can have the weekend to yourself and spend time with your kids or spouse, as long as on Monday you also do at least 4 hours of business activity. Again, I'm not here to teach you the strategy, I'm just giving you an example. And then also knowing that you can put as much as $58,000 in a retirement account in a single year and not limiting yourself to IRAs, right? Or the regular IRA, I should say. So, there's two ways to go about saving money in taxes. You can choose to evade taxes, right? And save $25,000 in taxes and perhaps land in jail one day. Or you can implement legit strategies and sleep good at night, knowing that you sort of got that tax strategist mentality and at the same time save the same amount of money that someone who's sort of trying to evade taxes, right? Just do it legitimately. I just want you to know, again, the point of this video is to say like, hey, you can save as much money in taxes while sleeping at night, knowing that the IRS isn't going to come bother you because you implemented strategies that are 100% legit. All right, real quick before I want to let you go, I do want to make sure you stay tuned for this. So on my website, I just want to make sure you're aware of all the resources here. Okay, a couple of quick things. One is I do have a course that I created that is basically a clone of myself, right? So if you like the idea of implementing strategies, you can go check out this course. You won't just learn about the strategy there. I actually teach you how to implement it, whether you're using QuickBooks or even if you're not using QuickBooks, whether you're a sole proprietor or an S corporation. I'm going to show you how to implement all these strategies. Also, you can connect with me on social media or download this expense tracker for you that I created. File an entity for free, LLC, S corporation, partnership, whatever you need to file. Schedule some time with me. Sometimes some of you just have some questions. You can't find a reliable CPA, you want to talk to someone, you can schedule time, or watch some of my content I have posted on social media. If you don't want to look at my YouTube channel, you can see it here organized in a very neat way. All right, so that's all I got for you. Coming up here soon, if you're watching on YouTube, is some videos I think you should check out related to this very topic. And with that said, I'll see you in the next video.